All right, hello and welcome everyone to this live intraday strategy webinar on SB Trade Desk. Nice holiday edition. We are just a couple of seconds away, 30 seconds away from the GDP release. This is the third quarter print, guys, the final read. We're expecting a downtick from 2.1% the previous read, a downward revision to 1.9. Just about 20 seconds out. Good to be here with you guys this morning. Alan, Bernard, Hussein, Jason, Jency, you got the whole crew. Great to be with you guys. All right, 7 seconds out. Dollar index is right on tap here. We did just break below support, so watch this region here. Print comes out at 2%, better than expected. So we only got a 0.1% decrease rather than the 0.2 expected. Personal consumption held the 3% print. GDP index and core PCE, the Fed's preferred gauge of inflation, upticking. This is a pretty strong print across the board, guys. Despite the fact that there was a downward revision, that downward revision is lesser or smaller than expected. So I wouldn't expect to see too much of a strong reaction here. The risk really was a further deterioration. If these had come down even more so, you'd start to see all those expectations for the 3 Fed rate hikes that we're expecting next year start to be brought or pushed back further. And that's going to be the name of the game heading into 2015, guys, is going to be whether the data is able to remain supportive for the Fed's plan of that dot plot that showed the majority of Fed members seeing rates between or 2 to 3 hikes rather next year. So it could get some topside for the dollar here. Again, 12,123. We've talked about this level at length. That's the previous August high day close. Has been a major pivot in price. We broke below it last night. We want to see if we can clear this region back to the upside here for the greenback. All right, let's try that again, guys. I am sorry. I was talking with the mic not on. I think it was still not on broadcast, but we just got the release for the third quarter GDP for the United States. Came in better than expected, 2.0%. We were expecting a downward revision to 1.9. Personal consumption held at 3%. GDP price index also at expectation. Core PCE, the Fed's preferred gauge of inflation, also on an uptick here to 1.4%. So a pretty decent read for the greenback. This is going to be the name of the game heading into 2015, is how does this data, or is the data supportive for that dot plot that we saw from the latest projections of the Fed members that saw 2 to 3 rate hikes heading to 2015. On its face value, again, this would be a constructive print here for the dollar. So to the previous comments when I was talking to the dead room that wasn't open yet, good to be with you guys here today for this final 2015 webinar on SB. Alan, Aurelian, Bernard, Jason, Jency, we got the whole crew in here today. Kyle, great to be with you guys. Tim, happy holidays to you, Aurelian, as well, and to everyone here in the room. So before we start getting into the trade setups, now that we got the event risk out of the way, again, keeping in mind that this is a pretty supportive print, you wouldn't expect to see too much of a reaction. The risk was really if we saw a bigger than expected downward revision, and specifically on the back of the latest interest rate hike, you're going to want to see that data remain supportive of the Fed's outlook. So more or less in line with expectations. Dollar index broke below that all-important 12,123 level in overnight trade. Again, the August high day close. We're still looking at this region now as resistance, former support. And this is what we really need to clear to gain, or to clear the way rather, for a dollar push higher. So the risk is for a little bit more of a dribble lower here in the dollar despite the data. Here's the dollar index that we were looking at earlier in the week. So from earlier in the week, here's what the Sunday open looked like. We had resistance right here at 12,171. We didn't even see a tag of that. Broke support at 12,143, and here's that key support zone. We kind of just pushed right through. So watch for resistance, 12,123 into 12,131 here for the dollar. Also, a pending resistance trigger has been there for a while, so you don't want to be coy here, trying to get cute on the long side of the dollar until we see some sort of reversal in momentum. So with that data out of the way, before we jump into the charts, We just want to keep in mind, again, guys, we're heading into really thin holiday trade here in New York. I am not really an advocate of trying to scalp these markets per se. Just for, disclaimer out there, I am still holding a position right now in Aussie Yen. We'll go over that setup from last night. But after, the clock strikes midnight here in the U.S., I'm really very, very reluctant to take any near-term trading strategies heading into the holiday and heading to the Christmas break and over the weekend. So just be a little bit more nimble, reduce leverage size if you are going to get into these positions, and just expect some really funky price action as you start to see a little bit more whipsaw with the thin volume here on the night. Okay. So, any questions on the dollar index? A quick look at the daily dollar index before we move on. Here's what it looks like, and it's a little bit of messy of a play here, guys, but at the end of the day, this was a big region. And there's that 12,123 level. That was the final straw, right? And if we broke below that, we're going to want to maintain that bearish bias. So I'm more inclined to say further down for the dollar. Not against all the pairs, though. So we'll take a look at the dollar crosses for sure heading into the close of the week here. But below 12,123, it's definitely at risk for further push down. The next confluence support that you would really start to look at doesn't come into play till here. I know it's a ways down for where we are right now. It's 12,071. We talked about that level last week. If you recall, that was actually the low day close that you made for the month, the high for August trade, and also the reversal day close that you made subsequent to the April high, which was the previous high before this break. So lots to look at right down here. You have the median line confluence, which comes right in line with that over the next few days. On the upside, as far as resistance is concerned, you're still looking at 12,146. That was the near-term bullish invalidation level that we marked last week. That's going to now maintain as our bearish invalidation level. So as long as we hold below that, you're going to want to, that actually represents the weekly opening range high at this point too, almost. I'm sorry, the weekly open, 12,146. Okay, let's see if this print gives us any further drop down here on the dollar getting into this session. Let's jump into yesterday's piece. Hey, Permendro, great to see you in the room, man. Good morning. As always, guys, feel free to throw out any questions, trade setups you guys want to look at as we head into the close of the month. The dollar crosses are all in focus. I'm really interested in what happens in the yen here as we get towards the end of the year as well. Sterling crosses are definitely poised for some sort of move here, and we'll take a look at the pound dollar. That's been in a really nice setup from that Sunday report, so we'll take a look at that. Mark says, Mike, before I forget, wishing you happy holidays, health, happiness, peace, and hope for you and your family. Mark, I appreciate the kind words, my friend. Same to everyone in the room, for sure. Okay, let's jump into the Aussie Yen. So here's what the Aussie Yen looked like yesterday, and I think may have been a chart more gauged for the radar more than an operative trade. I'm in it on the short side, but here's basically what we're looking at. So the broader trend is weighted to the downside. In fact, before we even get deeper, I do want to just note to you guys, give you a quick sneak peek. Both myself and Jamie are normal contributors still to Daily FX, and we both wrote our forecasts for the year. One of our best trade setups. My personal outlook, or one of the main things I'll be watching for a longer term setup next year, is Aussie Yen. Aside from the monetary policy divergences, which isn't that big between the two, you're looking at risk markets which are seemingly vulnerable heading into the new year. This has been the confines of a very clean multi-year downtrend off the 2013 highs, and certainly the break that we made this year of that trendline support that dates back to the 2009 lows certainly suggests that this thing has a little bit more juice to the downside. That said, here's what happened last week on the Fed's first interest rate hike. Came into a major resistance. I was looking for a stretch into the 91 handle, if you guys remember on this. We didn't quite get it, and then the reversal took you right into channel support, and we're kind of bobbling here. Broader trend does look lower. Heading into 2015, we'll be looking at targets down at like 81.80, or 2016 rather, 80 16 would be a larger 50% retracement of the entire rally from that 2008 low. So definitely a pair where the broader side is to the downside. Near term, okay, in the daily, you had a nice little bounce off a 50% retracement just from the advance off the yearly low. Excuse me, this is the September low. Okay, you got a topside pop there. We were looking at the 100-day moving average, yesterday's resistance, and in the report we noted, look, you're probably going to see a one more break higher here for the Aussie Yen. You did. You saw it break that confluence resistance at 87.25, and we're looking to stay bearish below 87.50. I know that we're trading above that right now, but a basic look at trendline resistance off the highs saw this capped. You saw a trigger on a 5-minute and on a 1-minute give out. So I'm currently holding shorts right about off like 87.60 here. So we'll see if we can get the downside move. You haven't gotten the longer term trigger yet. Again, these thin liquidity conditions, you just got to kind of be a little bit more nimble. If we break through the highs, it's a tight stop. I'm just going to bail out of the position. You'd likely see a rally towards 88 at that point. There's really nothing in between. That's a former 100% extension, and 88.09 is a really, really important pivot. Look at that. Keeps going. Resistance, support, 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 breakthrough, resistance. Coincides right now that entire range with the median line parallel. If we break higher, remember, this is a proposed pitchfork, right? We really don't know if this is going to give us guidance until we see some sort of reaction off of one of the median lines. So that being said, now we'll be on the lookout here if we can see this thing turn over. One other thing I just want to take a look at, bear with me one moment. Okay. Interesting. We might want to adjust it a little bit, but 100% extension takes into 87.67, just above that high. Okay, so if this is going to be correctionary, that's kind of where you want to see the max of this thing hold. If it blasts through, like I said, 88.20, 88.09 would be the first area of initial resistance. Hey, Bernard says, Mike, can you go to the day, please? And nice holidays from Germany to the team and good trades for all of us. Cheers, Bernard. The daily for the Aussie Yen, my man, it's right here. Hussein, for sure. Kiwi Cat, I haven't looked at it, but we'll take a look. Bernard, is that the daily chart you're looking for? So this is actually the ML formation from the 2013 high. It's the same one that you were looking at on that weekly chart I showed you. But certainly price action has been really, really clean. Even the sliding parallel. Look at the decisive price action on the pivot there. On a downside break, by the way, if we clear 86.40, that 50% retracement, you're looking at big support down near 85.40. That's the key 618 retracement of the rally. Former trendline resistance. Current operative trendline support, all right here. So the levels are pretty clean. Oh, Bernard, you meant DAX. Oh, okay, I'm sorry, I didn't read that right. Yeah, we can take a look at the DAX. Let me just jot that down. Any questions here on Aussie Yen before we move off? We'll see if that short pans out or not. On the initial targets to the downside, by the way, on the short, you'd be looking for about 87.25, 87.26. Remember, a quarter of the daily ATR gives you about 28 pips per scalp. So we'll want to be, very prudent as far as following that. Minho asking a question. Anything's on the table, my man. Any asset you're looking at, we'll be more than happy to cover. So feel free if you want to take a look at the FTSE. I'll jot that down too. Okay. So that is Aussie Yen from yesterday. We'll see if we can get some play here. Again, looking for a hold of that trendline resistance. Again, topside break beyond that 87.76. You'll likely see that 88.20, 88.10 region give us the next catch. Next up on tap yesterday was Euro Aussie, another one that we were following here on SB last week, or the previous week, excuse me, as it was breaking out into that high. The downside kind of got limited. All right, here's what the daily looked like yesterday. And here's what Euro Aussie looks like right now. So the basic premise is you're still within the confines of this consolidation. Remember 2 weeks ago, rather, when we broke above that 49.50 region, that was huge. You cleared the 200-day moving average on that run. You cleared back above a major pivot in price. And momentum gave you a really clear trigger to the upside on a reversal candle off of the low. Okay, so a huge move. These triangle patterns, wedge patterns, typically are continuation patterns on average. I can tell you a million instances on where that hasn't been the case, but if we go by the book on classical technical analysis, these are typically continuation patterns. So we do favor a topside break. That being said, the near-term picture is actually pretty clear. Here's what the scale looked like last night, and then we'll zoom in. So I put a piece on this on Daily FX, actually. This thing was just approaching that 618 retracement. We jumped into a short at that position. Half came off at 51.45. The rest came off down here. So we're looking to see if we get a topside break. The levels are very clear. You got key resistance at 53 still, okay? Remember, on the daily chart, just to put things in perspective, why that 50% retracement is so important. We don't stress any fibs in and of themselves, but it is now also this upper median line parallel for this formation dating back to 2013. You can see this thing caught so many major reversals in price, right? And here we are in the break, back checking it as resistance. So on a break of the triangle to the upside, that's your first target. This is what really needs to get cleared to achieve. You're looking at 155.22 as an initial target and 156, that swing low from September. Here's what we look like yesterday on the scalp chart, and here's what it looks like right now. So you saw that support give out at 51.54. The drop came right here into this trendline support. It actually broke right through. This was an early London trade and came right back up. So I'm still favoring it. This could easily be a false break. You know, these compares, specifically with what's going on in the Aussie, not too surprising. But we really do need to see a topside break of this to challenge that 53 level. And this is the real key. So any longs that you take as we head into 53, I'll actually be shaving down most of them. I don't want much exposure at 53. If 53 breaks, then we'll look to buy pullbacks. But you know, I don't really want to target anything above this until this thing gives out. If you want to take some on the table, bring your stops up and leave some on just in case we break. That's a different ball game. But any long scalps on this breakout, you really need to watch that 53 level with great interest. At this point, it's also the 100% extension off the low from last week. Mark says Euro Aussie, yeah, also looking for long, but would like it closer to 150 or 150.25. So 150 is a level I was looking at yesterday, and I do like that level, Mark, because of the median line. So if this median line formation is in play, and you know, forget the point structure, it's just basic trendline resistance, take the parallels, okay? That takes you basically into that range that you're talking about. The only issue is that this confluence region here is pretty big for me. Well, let me take that step back. The broader bullish invalidation is down here at 49.50. So if you read the report last night, that's kind of where we're drawing the line. Even if you get this break, I would be looking again for a long trigger here. This is a big pivot. It was the measured move from the break off the September highs. You know, is where we maxed out on that reversal. Huge outside day. It was the 2-week low at this point. And there was one more thing just below. Oh, yeah, this is the February highs. A little bit lower than that. But near term, if this gives out, Mark, you know, you could see it drop right into 49.50. I really wouldn't be surprised. It's a big pivot. 38.2 off the low, and the confluence 100 off the high is still right there. So we'll see. I don't have any positions on this, again, as a disclaimer. Mark says, yes, the February high. I was looking at that too. So it'll be interesting to see. Right now, all you have, and the simplest structure, how to break it down, I always try to break the trade down in my head. It's just a basic opening range. You set an opening range high. You set an opening range low at support. Watch for a break of that range. In the meantime, you can feel free to play the inside, but just make sure, again, you're keeping in mind the trading conditions that we're in, guys, are not ideal for near-term trading. He says first or second week of January, maybe. Yeah, I think. I mean, here's the thing: the consolidation won't wait. The consolidation is typically these triangle patterns break before 10% into the apex, meaning the apex of the triangle or the wedge formation. 10% in is usually what you'll see the max travel time for this is. So I think within the next couple of days, you need to see something. You need to see something. There's really not much more room. Mark says, right, I understand. Thank you. You're more than welcome, Mark. I appreciate that. So no plays on this yet. We'll see how it fares after we get out of this consolidation region, but the levels are extremely clear. And again, we'll continue to watch this one, favoring obviously a topside break of the broader formation for a move back up towards 155. Any questions on Euro Aussie before we move on? Okay, so we talked about Aussie Yen and we talked about Euro Aussie. I want to jump into the Aussie Dollar. So that's been for me a little bit of what's the word? A little bit of a curveball so far here. Oops, that's dollar index. So here's what the Aussie looked like on last night's update. This was the report for the previous night on Sunday. Here's what Aussie dollar looks like now. First on the daily chart. And the basic premise was this region here, we were sort of sitting at it yesterday. This is a big resistance, and if we do break to the upside, it would shift or would invalidate the near-term bearish bias. Again, no positions typical right now on the Aussie dollar, but we're pressing a near-term resistance. Here's what it looks like on the 30-minute. I don't know. I just haven't had any clear-cut triggers on this. I've been waiting for this. If you looked at yesterday, again, that same trendline support, I was looking for a rally into here and maybe a short trigger. Well, we broke above that region, and we still haven't gotten that trigger break. The same trigger still right here in view. So I've kind of just been watching this crawl higher. I would have liked to see it hold 72.27. We're now above that region. 72.27, by the way, is the low day close. No, I'm lying. 72.27 is actually the open for the month, guys. I apologize about that. 72.25. I had that labeled wrong. So now that we're breaking above that, and if we push higher in U.S. trade, again, this kind of invalidates the short side of the trade. So if we get a pullback and a long trigger into the U.S. open against 72.27, your topside play would reach all the way into 72.80. So it's actually a decent trade. I don't have much conviction of a stop until we get another swing low against this region. So look for the U.S. opening range, hopefully to offer us something here on Aussie. Here's what Aussie dollar looks like right now on a 5-minute chart. You can see that the entire London range has been pretty well defined. Add to that the U.S. range is inside, gives you a very nice setup heading into the U.S. Open. A downside break against 72.27, the same exact region we're looking at, would put you near-term bearish against the high. Vice versa, a topside break would put you bullish against the low. That's just going to ascertain bias. That's not necessarily your trigger to enter the trade. That just is what gives you the bias validation. Then you'd look to buy pullbacks or sell rallies. I do have to say a couple of things. Excuse me. The momentum signature still remains rather constructive on the 5-minute chart off of the lows from the session yesterday. Multiple breaks into overbought territory, multiple holds and turns ahead of 40. However, on this last stretch, you're seeing what? Some divergence. So it suggests that near term, it could be vulnerable for a turnover. Actually, it looks like you might get a decent near-term trigger here at this point. Let me see what the 1 minute looks like. And give yourself some guidance. This is sort of where you'd want to bail on any short exposure. Remember, it's rallying right now. The near-term focus is higher. So whenever you jump into a short scalp or whenever you jump into a trend that is counter to the daily trend, you want to make sure you set up triggers on the opposite side of the trade. So if this breaks, I kind of want to jump out. So this looks primed. I'm not going to get involved in this because I'm already holding Aussie Yen exposure, but this looks like it could be a nice hold here. Again, we'd need to see it break sub 72.27 to validate a little bit more of a near-term pullback here in Aussie. Any questions on Aussie dollar? Mark says Aussie and Kiwi are really moving into bullish territory. I mean, they're flirting with it. I agree with you on that. In fact, this trigger gave out yesterday. I was looking at this, but I didn't really want to clear it until we broke at least the basic channel resistance that we're in. Also, keep in mind, guys, I know this is extremely messy. It's going to look messy at home, but just bear with me one moment. This longer term slope, just basic trend line, forget the actual formation, just basic trend line support. You see where that's coming in right now into current price action? If I zoom in, keep your eye on that lower median line parallel. You see how many times we butted up against it? Support, resistance, resistance, break, instant support, break, instant resistance, and we've sort of been straddling it ever since. Here we are again, yet again. So if we break through this onto the upside, 72.80, again, the same levels that we talked about would be sort of the play here for the Aussie. Now, looking at the Kiwi, since we're kind of on the topic, here's what Kiwi Dollar looks like on the daily. Again, testing the monthly highs. My notes from yesterday says question mark top. Oh, that's the day before. Support 67.17, topping question mark. Let's see what the intraday looks like. Wow, I can't believe that held. So I literally just tacked this on yesterday because I was trying to see if I can get a scalp with a downside break of this. I can't believe it's still holding. So this is just a basic tack on. You never want to put too much emphasis on these really, really narrow near-term formations, but it's a great tool to invalidate the operative immediate trend. So obviously that trend line support held, and here we are breaking into fresh highs for the month. Near-term resistance 68.42. That's just a basic 88.6 from the entire decline off the highs from October. And then you also have former lower median line parallel come into play. The high day close, that comes in at 68.49. 88.6 comes in at 68.43. So near term, watch this region. And let's see what this looks like on a 5-minute chart. Okay, so it's not as clean as the opening range as the Aussie was as far as the London trade session. A little bit bigger, but pretty close. Support 68.12, resistance. I would still be using the Tokyo highs, but let's just say 68.30 for argument's sake right now. Key resistance is 68.50, 68.40. So I'm not really interested in any long exposure. Rather, an emotional or spike high into this region actually might be a nice near-term short exposure just into parallel support on this stretch here. As you can see, we're getting some ongoing divergence in the near-term momentum structure. So there was a scalp on this one I took yesterday. Here's actually a scalp that I was in on Kiwi Dollar as we came into that resistance yesterday. Got stopped out on that one for 20 pips. It was right around the 850 open. Yeah, it was on this stretch right here. As we were coming back into that high, had to stop against that 618 extension, or what was that, a 618 extension? Yeah, that 1618 extension at 67.78. And we sat in the trade literally all day long. I just put the stop on there. I had a limit down at, I can't remember what the target was. I think it was the Friday high down here at 67.50. Didn't quite make it into there in overnight or at the open of Asia trade. Basically, this thing just plowed right through. So I'm not going to try to get another short exposure here again unless we get a decent opening range break to the downside. Instead of selling into resistance, guys, on an uptrend, we want to see the momentum really give us a downside break. Didn't happen yesterday. It might have been a little bit early on that scalp, but we'll see if this offers a hold. And again, major key resistance near term 68.50, 68.43. Keep in mind, where's the 200? It's pretty darn close. I think it's right around there. Okay. Just give me a moment, guys. Computer wants to freeze a little bit. Excuse me one sec, guys. Sorry about this. Okay. About 68.60, 68.65. So just above basically that key region we're looking at as resistance is the 200-day moving average as well. Point being, guys, I'm not interested in any long Kiwi exposure from here. On a scalping basis, if it spikes into that region, you get a short trigger break, specifically a multi-week like this, you might get a decent short scalp off of it. You're looking for about 22 pips, so it's not the ideal candidate, a little bit tighter on the ATR. But certainly testing the weekly highs and the monthly highs, and if that gets through, I mean, just the high from October would be a soft target at 68.96. You'd be basically looking for a run to 69.70, the broader 50% from the April decline of this year. In fact, yeah. One other thing I do want to just note real quick on the Kiwi Dollar before we move off, the momentum signature on this trade. Remember that aside from the Aussie, the momentum signature on this one was a little bit more indicative of something to show us a little bit more of a magnitude rally than this, because this was the first 60 break that we saw in price since 2014. Okay, and it's the first 60 break from oversold territory since back here. Okay, oversold into a 60 break to the upside, and that was in the confines of a still much larger stretch higher before it moved lower. So just to put things in perspective from what the momentum signature is saying, we still haven't broken 60 again this month. So if you do get a topside break there, and specifically if we clear that 200-day moving average, which is right now dead line with that former lower median line parallel, I think you'd see a little bit more conviction for playing alongside here on Kiwi. Any questions on this? I remember 2 months ago an expression from Jamie. He said, I wasn't bullish enough on Kiwi. Really think the same now. We should be bullish. I mean, if we had stayed bullish, I guess it would have been still working out really well. This was a major run here. Major run. And you had ongoing divergence for like literally 3 months into the low. Also, on the longer term, again, I'm just going off the fly here, guys. Just want to see what this looks like. If this is within the confines of a larger structural advance, look where that 618 comes in. So, in fact, let me clean this up a little bit. Okay, it's very similar to the slope we've been watching. Very similar, only we've already gotten a couple plays off this one. So I'm going to go ahead and clean this up just a little bit so you can have it. Guys, keep in mind, again, anyone who's newer to the room, remember, you can always click on the camera button in the top right-hand corner of your GoToWebinar screen to take a screenshot of any of the charts that you see presented on any of the webinars in SB. So just keep that in mind for future reference if you need it. That's sort of the game plan here, or the key levels that you need to watch for near term. Constructive above that slope. Mark says, I have that fork also. Awesome. I asked Santa for a crystal ball. He's, hey, if you get it, make sure you share it with us here. I've asked for that for a couple of years now. It just doesn't work. All right. So that is the Kiwi dollar. Now I want to jump into the rest of your questions, guys. We have some time here. So some of the pairs that you're looking at, I also want to look at sterling and dollar CAD have been things I've been watching. But real quick, let's jump into some of the questions you had. So Bernard wanted to take a look at the DAX. Aussie Yen still holding that trendline resistance. We'll see if we can get any juice on the downside here. But the German 30 looks like this. And again, Bernard, I haven't looked at this recently, so just give me a couple of moments and get my bearings on where we are here. Oh, that's pretty neat. So you see that extension I just tacked on right there? It's actually almost the same exact slope of basic trendline resistance extending off the yearly high. That's a good thing. Okay. So Bernard, I can't say I have any like pending triggers right off the bat, and you are more or less in the middle of a pretty key important range. So I'd be looking for resistance near the upper median line parallel. Wouldn't really mind the 50-day moving average per se, but it is up there, this region. Okay, for resistance. Major key support, I think that's pretty clear. That was right here. And this was the September. Okay, so this was the September high day close. I know it doesn't look at it, but it's right here. So this was the high that we made for September. That reversal day close came in right at 10,168. The 618 is at 10,115, and the 100% extension is at 10,190. So you got a pretty big region of resistance. Wouldn't really stress this extension at this point. So those are the major key levels I'd be watching near term. Here's the thing, Bernard. If this decline is a simple correction, 100% extension, 618, this is, I've told you guys this a million times, this is my favorite Fibonacci confluence, is 100 off the high and a 618 off the low, or vice versa. tends to be rock solid region. So you saw a pretty strong rally. The resistance held exactly where you'd expect it to hold if this is within the confines of a correction. So you have your key levels on view here, Bernard, for the DAX. Broader structure stays lower below this region here, or broader bias rather. Bernard, does that, you got me before I even asked. He says, thank you, very helpful. Cheers, man. It's always interesting levels for German equities. I'm not really that super bearish. Okay, you got a whole, massive central bank pledging to do anything that it can, all that it can, to maintain support in the economy. You have U.S. here, which is actually starting to tighten. So I think actually you do see a decent performance in European equities heading to 2015. So I hope that helps on that, Bernard. I also had a question from Minho, I believe, on the FTSE, FTSE 100. So let's take a look at that. I haven't looked at that in quite some time, so we'll again go on the fly here. All right, give me a couple seconds. Let's just address this chart real quick. Might be an operative structure in play here. Get the low day close in there. Perfect tag, perfect tag. Momentum is pretty bearish on the UK 100, just on account of you haven't seen a 60 break all year long. I mean, a minor one here in January on the way into the highs, which, by the way, put in some divergence all the way into March before it finally peaked. So multiple breaks into oversold territory, hold at 60, hold ahead of 60, back below 40. Certainly momentum is not on the side of the FTSE 100. Minho, did you have a specific question here on the FTSE? Bernard says, I'm long the DAX, but the euro has to go down. So, yeah, the whole funding currency thing. So, euro, I think, we'll take a look at that in a moment before I get sidetracked. I'm going to write that down. Bernard, you have a good point. Okay, don't need that 88.6. And this caught the close lows on both dips. So here are the key levels I'd be looking at. Actually, this is pretty big at 220. This is going to be huge. It's the reversal day close and the key 618 retracement of the decline off the December highs. So this is going to be a massively important level. And basic trendline support turned resistance. Also something to keep an eye on. The high close for that rally is at, what's the close? 6,136. So 6,136, 6,155, major key resistance. And I would keep this for the near-term bearish invalidation level. You see a topside pop there, you can go all the way and challenge the upper median line parallel. So there is some room. So you're kind of right at a pretty key inflection point here for the UK 100. Not a clear picture as I would like to see as in the German 30 that we just went over, Minho. But those levels I'd be looking at for the UK 100. One other extension that would kind of be very interesting to see if we do make the downside break would be this. Oof. If you break key support, basically the low day close and that lower median line parallel, you know where you're heading. Does that help, Minho? On the UK 100. All right. The other questions you guys had on Kiwi CAD and Kiwi Dollar. Did we cover Kiwi Dollar? Let's jump to Kiwi Dollar. He says, thanks, Mike. Appreciate that, Minho. Anytime, my man. Kiwi Dollar looks like this. We went over Kiwi Dollar. Kiwi CAD. Here's the daily looks like. I don't really scalp these pairs. The exotics like this, the spread tends to be a little bit bigger, but on a stretch breakout like this, if you guys remember, we were actually really all talking about this Kiwi CAD as we came into this region. 90-40 was so massively important. You had a multi-year slope formation here, which has caught some major reversals in price. You had a 618 extension off of the lows. You had the yearly open, which came in right here at 90.43. That break was a massive range day. Following day, we even pushed through the current or the former operative structure. First target 93.13, 92.90. Second target at this point is the high day close for the year, 95.70, and the 138.2. Not really stressing that. The high comes in at 96.18. More importantly, it's a basic trendline support. You also have his resistance in that same region. So if you're asking me on this Kiwi CAD, who was that? Hussein. Could you go through Kiwi CAD? Happy holidays. Hey, same to you, my man, Hussein. So for Kiwi CAD, here's what I would say, man. I don't really like to get involved with trades like this. It's in an uptrend and it's in overbought territory. This is when the market has the highest propensity to keep going. I don't fight these signals. When something's in overbought, it can stay there for a month, a year, a century. There's nothing that says it has to come back. It's the turn sub 70 that's your signal. So on a trade like this, you're just looking to get long. How to get long near the highs, it's not possible with a proper risk to reward. So I just don't have a scalp per se on this. Let's see what the Kiwi CAD looks like near term. Here's a 30-minute. Okay, so you got something to work with for the last 4 weeks. We got a weekly open missing here. For the last 4 weeks, even more so, we've held within the confines of this simple ascending median line formation. Yeah, I mean, there's really nothing here. You have to look higher. That basic trendline support we talked about being resistance, coinciding with that high day close, 95.70, still what I'd be looking for. It's still what I'd be looking for. You might see it turn down a little below here and check support at channel support. You might get an opportunity to get back long if you came back into here. But even then, Hussein, the risk to reward has got to be tight, man. I mean, you're only getting 26 pips on a quarter of daily TR. On a trade that's this stretched, the pullback could be quite vicious. Okay, so not my favorite pair, but certainly these levels I'd be looking at. Hussein says, thanks, I got you. All right. I hope I'm coming across clear. Now, don't get me wrong. When you get the reversal signals here, momentum starts to turn, you get a couple opening range breaks to the downside. At that point, you're likely to have a beautiful play for a larger scale correction. But from here, it's just I just feel like it's sort of playing with fire. Or at least at a decent topside level. So that is Kiwi CAD. So we got the DAX, got the Kiwi CAD, got the FTSE, Euro Dollar. And sterling, oh man, here goes the dollar pair. So as we head into the end of the year, guys, again, keep your questions coming. This is the final webinar for 2015. Certainly, we'll still have some updates coming out, but feel free to throw out any questions that you do have. I definitely want to cover all of the majors. So here's a quick rundown. Euro dollar, here's what we look like on the daily. And we'll look in the 30-minute in just a moment. The only thing I wanted to highlight here, I haven't, and this is just me personally, I haven't really been too crazy about trading the euro. This was a big region we ran to yesterday. This reversal candle looked great. The short side was awesome last week. Now that we held the swing lows from May, the swing lows from July, the pivot from November, the 50% retrace, back above 50 in momentum, I kind of don't have anything to do with the euro right now. Okay, so I'd rather play a euro by way of euro Aus, maybe even a euro yen position. But for the euro, this thing could definitely still make another low before we start to break higher. So it looks like a clean 1, 2, 3, 4, 5, right, on the advance. You'd want to see a little bit more of a correction before we move higher. Major key resistance, you got a whole host of things. 200-day moving average at 1039, 100-day moving average at 1050, 618 at 1120, that's a little bit farther out, but you get the picture. Okay, I'm not even going to stress at this point the 50% retrace. I kind of want to just keep the focus on this region of confluence, longer term moving average, and basic trendline support turned resistance. Here's what the intraday chart looks like for euro dollar. Okay, so another one that has been holding a pretty decent, I can't believe all these held from last night, all these near-term ascending median line formations. This is just off of last Thursday and Friday's low here in New York. You can see a nice move there. Let me just snap these lines for you. Okay, and you can see we were looking at euro earlier in the week. Here's what it looked like. This is on the 16th last week. And we were just coming into that key support region right here. It was at 109, basically at 109, 108, 88, 108, 89, 109. And this was the region that broke. You saw support at 10, at 108.50, 108.51. That's right around here. Last target from that report was 107.87. The low was 108. Okay, so now that we've turned right ahead of that 107.87 target, you got some new opening range here for the week, testing channel resistance or trendline resistance, and the break looks for former channel support as resistance. That coincides with the upper median line parallel, and that's still right around 109.70. So a little bit more upside to go before you run into any structural resistance. As far as a key threshold, you're still looking at the 110 barrier being pretty big. Pretty big. Graham says, hi, Michael. I just logged in to thank you for the SB service and wish you a very best holiday season and 2016. Graham S. Hey, man, I really appreciate it. You guys have made SB a great year so far, and we're looking for much more awesome stuff heading into 2016, more stuff with IDO, and we'll get a very interesting year, I'm sure, especially with the monetary policy divergence that you're seeing across the board. The U.S. finally lifting off of low rates or zero rates for over 6 years, first interest rate hike in nearly 10. In fact, the interest rate hike that they made last week or 2 weeks ago, guys, interestingly enough, is last week, is exactly to the date 7 years that we've had zero rates. So it's quite a big shift heading into 2016, especially with Europe still easing. The BOJ likely to have to do more, right? RBA is kind of thrown up in the air right now. If you look at interest rate expectations from the RBA, there are still some calling for an interest rate cut heading into next year. Personally, I think with the U.S. rising on rates, the Aussies kind of gonna, or let me take a step back. Glenn Stevens, RBA governor, will likely take a step back, right? Because inherently you're going to see some further appreciation in the dollar, and you've kind of already seen that. Now, if the RBA does cut next year, that'll be even more so divergence in monetary policy between the Fed and global central banks. So anyway, I got sidetracked. Graham, thank you for your comments. God bless, man. I wish you a very happy holiday season as well. For the euro, I'm just going to drop a tag right here at that 109.70 region, guys. Watch that confluence near term. Really, really, really constructive momentum signature, guys. There's really nothing here that is bearish. You're seeing some divergence in momentum, but again, we haven't closed this candle. We'll have to see. The invalidation level would be a break below this confluence. Former trendline resistance, current operative channel support. Any questions on euro dollar? And I have my notes here. Bearish invalidation remains at 110 high. So this is still going to be, still going to be near-term bearish invalidation level. Last but not least, I do want to talk. Oh, we still have two things: sterling and CAD. So here's the British pound. Looks like, this thing is just so ridiculous. So we held a really clean initial kind of opening range above key support. This is the chart from last week and from Sunday's radar charts. Basically we were sitting and we opened up the week above major key support. It looks like we're trying to make a break lower. Multi-day support trigger and momentum has also given out on the back of multiple holds ahead of 60. So look, the only thing I just don't want to jump on board right here because you have what is that? The 2013 low? Yeah. 2013 low, and that comes in got 48.12. Not too far off from where we are right now. Oh, I have it right here. There it is. So this was a big region. You had a multiple confluence of the Fibonacci 100% extension, 786 retracement, and a longer dated 1618. We've made it through all of them, specifically on the back of the U.S. Open. If we hold below this, you're looking for 148.12 as support, that 2013 low. You're looking for channel support. Stays bearish sub 48.65. Okay, at this point, guys, these topside targets are null and void, right? Because we have a new low in place. So once we have a near-term conviction low, we'll go ahead and tack that retracement lower to get where we should be looking on the rebound. But as of now, this thing is testing some pretty big support. Larger implications are for a drop towards 146.80. Okay, that'd be just a basic median line parallel for the current operative slope. Basic trendline support. This is a longer dated trendline support dating back to the lows, I think from 2009. Yep. And a 1618 extension from decline off the July highs. I have that on there twice. And that's all right, but down here around 46.70 or so. Any questions on the British pound? It's seen better years, I can tell you that much. It'll be interesting to see how this closes out the year. If we do break 46.80, I mean, the April low would be a soft target. I think you're in for a much, much steeper drop if that gives out. All right, last but not least, dollar CAD. Everyone's been looking at dollar CAD with this insane rally, and when is it going to finally give out. So here's what dollar CAD looks like on the daily, and then we'll look at the 30-minute in just a moment. There's not really much to look at on that front. Look, at the end of the day, very strong uptrend. Again, momentum. Remember, we talked about this earlier. Still in the way overbought territory. The only thing that's very interesting about this is where we've kind of capped off the advanced near term, and that's exactly at the 2004 high, almost to the pip. 140.01 or 140.01 is the 2004 high. I think the high here was like 140 fractional 8. So literally like 0.2 of a pip off. Long story short, you saw an exact tag of here, and we've been holding a pretty tight range just below that. So, there's not really a trade here, guys. There's key levels to watch, but there's not really a trade. The only thing that would put me in focus from a scalping perspective, let me put that high back in view, and that's the U.S. markets just kicking off right now as we speak. But the only thing that would put me in focus in here is a basic break of this near-term trend line and a more convincing turnover in momentum. Look at this thing. It hasn't broken 40 since the start of the advance, start of the month, intraday momentum. Not even talking about a daily chart. So on something like this, yeah, you've been putting in some divergence, but it just keeps plowing through the high. And remember, divergence is something that can keep going on for hours before it pans out into a trade. Long story short, I'm looking for a downside break below 40 momentum, a downside break below support, and a recheck of that as resistance to start selling rallies. Other than that, guys, we're trying basically to fight a really strong trend, and I don't want to do it until we have the conviction for it. So I'll keep you updated if I do jump into anything here. I doubt that we'll get any decent plays here into the end of the session today, unless we finally see a break. One other caveat here, guys, is that the opening range low, objectively, aside from what Mike Boutros thinks, is right here. So the weekly low comes in right alongside that support where we just rebounded off of, and a break of that, you're looking for basic 236s just as an initial target. That's all the way down at 138.30. So you kind of get a picture of what's at stake here. A topside break above 140, you have nothing but structural support. There's really no key levels as far as Fibonacci or major resistance. You look for 141 handle and a near-term confluence near 141.20 of a longer dated upper median line parallel and channel resistance. All right, but I mean, the entirety of the week, you've been holding 40.60 in momentum, and you've set a pretty decent opening range just below resistance at 140. So use that to help you get a little bit more conviction on near-term bias once we clear that range. My notes say support 138.30. Yeah, that's right here. All right. Okay, that's all I have on my end. The other thing I just want to say real quick on dollar Swiss is you're coming off of pretty decent support, and we saw a nice rebound off that 618 retracement at 98 last week. This formation that we were looking for on the rally did break to the downside. So right now I'm just looking at a retracement off the low. You're still at risk. The short side's still at risk while above that major key support. So it could be a more prolonged rounding bottoming process. Long story short, the 618, what I want to highlight is at 98.60. That's a real nice pivot in price. I'm not sure why that got removed, but here are the levels to watch for dollar Swiss. Okay, and a quick look back at our Aussie Yen, see how that's doing. We're down like 2 pips. All right, we'll see how that pans out. Look for the U.S. opening range, specifically on the Aussie and Kiwi pairs that we were looking at, guys, with that really nice London range. Look for a break of that to give us a little bit more conviction on near-term directional bias. Again, that 5-minute trigger I've been watching looks like it could give out as well. I want to take this opportunity to thank all of you again for a great year. Wish everyone a happy, safe, and blessed new year. A Merry Christmas to all of you who are celebrating, and we will see you on the other side of the year. Best of luck trading to the close. Guys, keep it light. Again, this is a really treacherous trading time for near-term trading, so just keep the powder dry and make sure we stay nimble heading into the close of the year. Again, Best of luck trading to all of you guys, and we will see you in 2016. Cheers.